RSA Holdings is a small but high-margin company which provides network, internet and information security solutions. The company has a market cap of 157 million rand and a price-to-earnings ratio of 12. RSA's partners include Checkpoint, Bluecoat, F-Secure, RSA Securities, as well as Microsoft. So, Paul, let's kick off with you.
Yeah, look, the space they work in is certainly one which corporates are spending more money on, which is, information access security generally, and their main subsidiary, ISA, stands for Information or Internet Security Architects. So that's done well recently. You know that this company is totally ignored by the mainstream market, but since it got taken over and re-engineered itself from the old Wire 3K shell, that's what it used to be called, it has delivered 32 cents a share of dividends in the last 5 years. So
you could buy 0.83.
Trades at 83 cents,
yeah.
And in the last 5 years it's paid 32 cents of dividends. So it certainly has attracted a little following, but it's quite tightly held. Stock turnover is minimal.
From that disclosure board I just saw, you hold the stock.
Yeah, so what that means is that in our asset base, which is our client grouping, there are a couple of people that hold it, and the guy that holds it, again, was a friend of the management team, so he knew Clifford Katz from school or something, so that's why he wanted to hold the shares, and that's why it's in the portfolio. But from here, the only thing I can say is that they just did a deal to buy like some physical premises, which is unusual for a small company. They took the cash on the balance sheet, and they're using it to buy property in which the head office will be located. So that makes them almost more of a property holding company than a technology company.
So ISA turned to property holding company. Craig, your thoughts?
Look, I mean, it's an annuity-based revenue stream. A large portion of revenue can be predicted, and as a result, they pass their cash flow on to shareholders. They only have one dividend historically, and it's the last dividend, which is coming up, so maybe a good time to buy and take your 8 cents a share or whatever they're going to be issuing. So it's a nice story just from that point of view, but your shares price is going to plug along as earnings increase and as the dividend gets paid out. I've never seen Clifford Katz interested in any acquisitions. I think he may have looked at a few in the early years, but there's no indication that that's how growth's going to come about. So
Craig, not hot then
I think
for you.
if you want, not hot, no. I would say it's hot if you want to buy for dividends. Let me just correct myself.
Okay, so hot for dividends, not hot for long-term earnings.
No.
Okay. Paul, okay, you have to say hot because you
hold
it in a way,
Look,
don't
unless
you?
get invited to Clifford's children's bar mitzvah, then you can't be buying the stock. Too small, too illiquid, too marginal.